This is Market Wisdom for Traders, episode 11, delivered by Twigbe Eizogi. For forex traders, stocks traders, options, bonds, futures, commodities, and all chart-related trading. Advise to subscribe, share, ask your questions, and make comments. We are open for training and account management. All I bring to the party is 28 years of mistakes. I have made so many decisions and mistakes that it has made me wise beyond my years as an investor. The world has become much more short-term oriented. All sorts of people who used to be investors are now traders. These decisions now define themselves as enterprises whose goal is to achieve the highest rate of return, when they used to define themselves as long-term investors. One of the allures of this business is that sometimes the greatest ignoramus can do very well. That is unfortunately because it creates the impression that you don't necessarily need any professionalism to do well. And that is a great trap. You need to believe in something, but at the same time, you are going to be wrong a considerable number of times. The balance between confidence and humility is best learned through extensive experience and mistakes. All great traders are seekers of truth. There is no absolute formulae or fixed patterns. Markets are always changing, and the successful trader needs to adapt to these changes. Traders who try to find fixed approaches will be doomed to failure sooner or later. I find out that theories like buying low price stocks or stocks with low price to earnings, that is P ratios, were not very sound. Great opportunities occur every year in America. Get yourself prepared and go for it. You will find that little acorns can grow into giant oak. Anything is possible with persistence and hard work. It can be done, and your own determination to succeed is the most important element. The first thing I learned about how to get superior performance is to not buy stocks that are near their lows, but to buy stocks that are coming out of broad bases and beginning to make new highs relative to the preceding price base. There is absolutely no reason for a stock to go up in the current earnings if the current earnings are poor. So our first basic rule in stock selection is that quarterly earnings per share should be up by at least 20 to 50% year to year. Ideally, each year's earnings per share should show an increase over the prior year's earning. It's a unique combination of both strong current earnings and high average earnings growth that creates a superb stock. In our research, we found that 95% of the greatest winners stocks had something new. The new also refers to a new high price for the stock. We found out that 98% of investors are willing to buy a stock at a new high. Yet, it is one of the great paradoxes of the stock market that what seems too high usually goes higher. What seems too low usually goes lower. Another basic rule in stock selection is to pick the leading stocks, the ones with the high relative strength values, usually above 80. A relative strength of 80 would mean that the given stock had performed 80% of all other stocks during the past year. This brings us to the end of episode 11. Join us for the next class in our subsequent class. Remember, this work is for forex traders, stock traders, and all chart related trading. You're advised to subscribe, share, and ask questions.